Welcome to the STR Data Lab.
Hello and welcome to the latest edition of the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today by a guest, Nick Massey from Proper Insurance, Director of Sales. Nick, welcome to the show.
Awesome. Thanks for having me. Excited to dive in.
Yeah, so typically on the podcast, we talk with investors, operators. It's not too often they actually allow other vendors in the short-term rental space onto the show. And a big piece of this is one, they all want to be on the show. And like, I just don't want to have a podcast where we're just talking to other vendors. But I feel like insurance is one of those things that maybe not enough people talk about in terms of like, their short-term rental investment and like what they actually need to be thinking about after they buy the property, which is maybe what we're going to dig into today.
Yeah, and some of this even is before you buy the property, based on where you're doing your research geographically for the home. What are things you should be looking into? And in some areas, it's really difficult to secure insurance. So before you even get into making that offer and going down that path, insurance might be actually one of the first things you should be looking at to see if you can even get it.
Yeah, that's such a great point, because it wasn't until I had an offer accepted on a home I was buying as a short-term rental that I started making calls around of and getting quotes. And I talked to the whole bunch of people, and I was like, and they're like, start with who's underwriting your current single-family home because they already know you, they see, and as long as you haven't had a lot of claims, like, and you probably have your best opportunity from getting that group to underwrite your investment property. Reached out to them, they're like, no.
Yeah. That's the typical response. And one thing to think about when you're getting into investing, whether it's short-term rentals or you're getting into apartment investing or large multifamily properties and stuff, when you're looking at companies that specialize in that, they're not always underwriting the individual. They're typically just underwriting the property. And so that's where it becomes really important if you're looking in, say, a mountainous market, the Tahoes, Vail, stuff like that. You probably want to check if that property can be insured before you even make an offer, because those are areas where extreme hardening of the insurance market has come into play. And so it's not so much about who you are, Jamie. You're a good person. You're a responsible human being.
Nick, you don't know me.
I would like to assume that that's the case, but we really like, for us particularly, like, we look at the property. Is the property a good risk? Is it in an area that's defensible? Does it meet the building code and safety standards? Like, that's what we're really looking at. And so those are things where, kind of launching that conversation in the beginning so that you kind of know what to expect, or maybe you need to go back to the drawing board on where you're going to invest geographically because of insurance complications.
Yeah, and maybe that's a good way to take the conversation for just a little bit in terms of we've seen whether we believe it's sort of related to climate change or not, but and you can't get around the fact that we've seen more and more high value risk events in more recent years, which and as those events are insured, and we see more and more losses around and insured events, whether it be hurricanes, floods, fires, that has caused insurance rates to go up, and maybe go up significantly more in some areas of the country rather than others. So maybe just help frame it for us of like, how much should you be thinking about the potential of being able to insure a property and how much that's going to cost as you start your short-term rental investment journey?
Yeah, so a lot of what has to go on with decision making with insurance underwriter, it first starts with saturation. So the saturation of the risk amongst everything else that they're insuring, right? And there's two different modes of thought for an insurance underwriter. They like risk saturation in some markets because it means that they can withstand these kind of one-off claims, like the one house having frozen water pipes or the one house having a kitchen fire and things like that. Others look at it as they don't want a saturation of risk in a potentially natural disaster prone area. And so that's what we've seen really happen with the coastal areas and California specifically, with these insurance carriers pulling out of those markets. They don't want their risk saturated in there. It has nothing to do with you being a short term rental. It has to do with the overall risk class and them underwriting against that for their book of business. Now, when it comes to rate increases and things like that across the marketplace and across the entire country, insurance at the end of the day is a shared pot, and everybody is sharing in that pot. And unfortunately, you and I, as property owners, we can be inflicted by rate increases because of natural disasters in other areas. It's just the way the actuarial equation works when it comes to paying claims. Because if a company can't sustain the losses, then they go into what's called insolvency and they go out of business, and that creates bigger problems, right? So, initially, one, making sure that whoever you choose as an insurance partner, or when you start that initial looking, before you dive into the nuances of the coverage, can they and will they insure that property to start? As we see urban expansion into areas, it does one of two things. It either that urban expansion makes that underwriter choose not to write more because it's expanding into an area that's potentially forest fire prone, or it actually opens up the door a bit more because that urban expansion comes with hazardous fuel reduction in the mountain areas that allows more defensibility and allows them to write and have more saturation of risk. So it's kind of like a dual thing that happens internally with the insurance companies.
And it sounds like what you're talking about, and maybe, and one of the reasons why my homeowners insurance company didn't, for my primary, didn't underwrite it. It could have just been that they already had a lot of policies in that area and they weren't looking to take on any more.
Could be. Yeah.
The other thing that, and I started thinking about, and a lot of it sort of came from my wife, and she was like, "Yeah, there's the Airbnb insurance, the coverage, and I'm sure you can talk to that. There's what you get from your traditional homeowners insurance, but there's got to be a whole lot of additional risk that comes from operating a short-term rental that," she was like, "I want to make sure we're covered for." And I was like, "Oh yeah, that probably does sound like something we want to look into." So like, what are some of the common things that is sort of unique to a short-term rental that you need to be making sure you're covered for over and above what, and maybe what Airbnb covers or Verbo covers with their additional liability insurance, or what would get covered under traditional homeowners insurance?
Yeah, I mean that's it, it's a loaded question, and it's where we see most of the misinformation actually coming from. So to kind of scale that back a little bit, it's more for the listener. Like, let's simplify a few things here as we dive into the conversation. So there is no such thing as quote unquote short term rental insurance. It does not exist. Okay. Short-term rental protections come from how you build the package around your liability and property coverage. So fundamentally, insurance is highly standardized through what's called ISO, the insurance services offices. Those forms are standardized. And some companies in the retail market, and if you're, well, okay, Nick, what's the retail market? Anybody who advertises during the Super Bowl, that's the retail market. Okay. Um, and they don't have policies really built for short-term rentals. So they kind of start you foundationally in one particular product and then more or less patch a leaky raft through available endorsements or riders through the ISO marketplace for insurance forms. So it breaks down into three simple categories. You have homeowners insurance, landlord insurance, and commercial insurance. So, where do we need to start our journey in building this insurance puzzle through understanding that there's those three types of forms? Well, homeowners insurance is specifically written through ISO to be your primary residence. So, if it's a second home, throw that off the table. If you see HO on your form language, it's probably wrong. And you have landlord or second home insurance, which is a DP form. Those are built for rental, but traditionally long term rental or rental as a residence. And then you have commercial forms, which are much broader in scope and more or less are written, defined on what your business operation is. Is it a coffee shop? Is it a hotel? Is it a woodworking shop? Is it a retail space? What that is. When we look at short-term rentals, though, and this is the approach we took 10 years ago when the company was founded, you really need concepts of all three. So we built a package around that, right? And what are the risks with short-term rentals? What's the liability? What's the high kind of target property damage that people are going to be doing claims on? And that's where we started. So, not saying that going with a traditional landlord policy, for example, with these enhancements is incorrect. It's just, is it giving you those layers of coverage for the liability, much like your wife had brought to your attention? And it could be certain amenity offerings. It could be based around geographic location. Do you want to provide bikes, canoes, kayaks? Do you have? Are you going to be pet friendly? Things like that. So then you need to have that conversation. Does that carrier, does that product extend coverage to those items? Yes or no, right? So, kind of starting with the foundation, like we use short term rental insurance to market. So, if you go to Google and type in short term rental insurance, like you're going to find all of our marketing around short term rental. But
I assume that's just like how we have Airbnb data. It's
yeah,
like,
exactly.
yeah.
Exactly. So it's all keyword stuff. It doesn't actually, there's no actual thing that's built out there that any insurance agent can go and grab that is a short term rental policy. It's a construction of a product around insurance forms that relate to the exposure that make it inherently correct or incorrect for short term rentals, depending on how they do it. So, kind of starting there. Now, when you kind of dive deeper into it, there's the two biggest liability exposures that you have is you have your car is number one. It's the number one liability risk in America, and then now you have your short term rental, and it's a massive liability exposure, whether you believe it or not. And we live in a society in the U.S. where you can virtually be sued for basically anything, right? So building that package around really the property and finding a partner in that who really knows what you're doing, understands those risks and how to build a package for you around that risk specific to your property is more important than just getting a form that says short-term rental on it somewhere.
So, two questions around that. And maybe I'll start with the one I had in my head first, which is just what are the amenities that I just shouldn't have as a short-term rental that just aren't worth my risk?
Yeah, that's one I get all the time at shows and speaking on other podcasts and stuff. So my rule of thumb is if it's not an amenity that you can check the box on an OTA, you probably shouldn't have it at your property because one, and your data at AirDNA would more than likely support this as well. It's not going to change your ability to book a guest because they're not searching for a diving board, they're searching for a pool, right? They're not searching for a 75 horsepower pontoon boat that's available. They are searching for a lakefront, right? So if it's not a drop down on the OTA, just general rule of thumb, you shouldn't offer it. Rope swings. There was a case back in 2015, which is what posed us to take a very strong stance against it down in Austin, Texas, with a rope swing where the tree branch broke. It killed the father. And immediately when that happened, we're like, no, we're not messing with these anymore. And also, it's not a searchable amenity. You might have a photo of it, but it's not something when I go to search for your home in whatever market you're at that I can click that that's what I want. So that's really kind of rule number one. If it's not searchable, it's not a filter item, you probably shouldn't have it at your home.
So I should get rid of my pickleball court?
Pickleball courts are becoming searchable, so you
Okay.
can have that. Sports courts are a growing amenity, and it's something that when you have the right insurance policy, they're definitely going to extend that liability to protect you.
Yeah. And then my other question, I'm sure is a popular one that you get is sort of centers around like, what are the top things I'm actually going to get sued for being a short-term rental host of like, when you hear these things, it's like, oh yeah, that's pretty common.
Slip and fall is number one for sure. And the biggest way to prevent that from happening, you can't stop somebody from being clumsy, but you can kind of design your home around anticipating something bad happening, right? So the way you place your area rug in your great room Like you shouldn't have corners sticking out from the furniture in a walking path. Like those are easy ways that you can dive into still designing your property well and making it visually appealing, but also with a mindset of safety to prevent those from happening. So slip and fall is number one. It's why we get really concerned about whether or not you have handrails in the right places, guardrails around your deck, signage and stuff around your home where necessary, not necessarily to prevent the claim from happening, but more to provide a much stronger point of defensibility as the insurance provider to help you either get out of that case or get it settled quickly and not, stacking up to massive, massive numbers and massive time for you in litigation. The other big one that we see growing right now is dog bites. And so pet friendly properties can help you increase occupancy and revenue, but it comes with the risk of what happens if that guest dog gets out of the property and bites a neighbor, and then they name you and the guest in a lawsuit. What happens there? And unfortunately, a lot of policies either don't cover animal and pet liability, or they have limitations that you're only covered for property line only. So when the guest is off your property line, you basically don't have any more insurance protection. So again, depending on what you're offering is kind of more of a need of kind of what level of coverages you're looking for. So slip and fall, definitely number one. Dog bites are growing, $1.3 billion in settlements in 2023 across the country for dog bites. The other one that continues to be a growing thing is baby equipment or toddler equipment. So there's a lot of companies that you can help to utilize to kind of transfer the liability. This is not a paid advertisement, but Baby Quip is a great company that can, if somebody needs baby equipment, I got two small children, a third on the way. I am not flying from Montana to Florida with all of the baby stuff. So I can engage with Baby Quip. They can deliver what I need. They set it up and they take it down when I depart. And that liability of the use of that is now transferred onto that rental company and not you, the host.
So, and some things I've heard and related to two of those, and some things that maybe I'm guilty of is like we have bath mats, and I sort of think them as sort of helping you not slip, but I've also heard others say that they are actually a slip hazard. Do you have an opinion on that?
So maybe answer the question with a question. When was the last time you stayed in a hotel?
Uh, Last week.
Okay.
And
Where?
that was the point of, like, they
Yeah.
sort of give you like a roll-up towel to sort of put out to sort of catch the water, but there's not one there already when I walk into the bathroom.
Yeah, we can learn a lot about how hotels manage risk and adopt that into short-term rentals to help ourselves. So I was in Vermont last week for their local state conference, and get into my hotel at the resort we were at, and the bath mat is just draped over the tub, right? And so now it falls on me, the guest, on what I do with that mat. Do I put it down? Do I not put it down? Right. And so you might look at it and go, well, we have this nice, beautiful, fluffy thing and we leave it on the floor, but it's more or less a magic carpet at that point. Where does the where does the liability fall? Well, it falls on me, the homeowner, unfortunately, because I'm the one who put it there, or I instructed my turnover team or cleaning team to put it there. So take a page out of the hotel book and have them available, not already laid out.
No, that makes sense. The other one, what was the third sort of example? Sorry, I just went blank on it.
So slip and fall, dog bites, and baby equipment.
Oh, baby equipment. Because it can be such a, like, a factor that people, like, want when they go to the stay, and, like, you use some of these things, and it's, like, almost the cost of, like, buying it new, like, of just, like, offering, like, "Oh, if you want it, like, we'll buy it new for you, and it's gonna show up there new in a box, and you can sort of put it together and operate it that way."
Yeah, no, I don't want to scare anybody away from being a family friendly property here. And I'm not saying you can't offer cribs and high chairs and kids' toys and stuff like that, but it should be known that the number one recalled consumer product in the world is baby equipment. So you can have baby equipment at the property. It's not a problem. And virtually every insurer is going to insure you. The problem is how much are you opening that door for potential litigation against an injury with somebody's child? Some people go into this, or other advisors in the space for safety and other things might say just don't provide it at all because of that. It's the number one recalled product in the world. My advice would be, if you are offering it, make sure that you have an Excel spreadsheet with the manufacturer, the serial numbers, and all of that stuff, and you're keeping an eye on the consumer product recalls. Because if that product is recalled, you should remove it from your house and replace it. Right? That's just a way to help manage and mitigate that potential risk. So again, I'm sure with AirDNA, you have a lot of data on boosting revenue through offering that type of stuff. So if you want to do that, perfectly fine. It's not a problem. Just make sure you're managing that risk effectively with a simple spreadsheet and monthly checking that the recalls. And so if you see that product on there, you can get it out of the house and replace it with something new.
So my takeaway there is that I'm not just going to use my leftover pack and play that I used for both my kids that is now like 8 years old. Like maybe I'll just go ahead and invest in a new one, have it at the property, and keep track of whether it's recalled or not as a way to sort of mitigate risk there.
Yeah, and you can sign up for email updates with consumer product safety. So you can plug in your info, your email and everything, and they'll send you an email that, hey, this product has been recalled. Um, I'm a I'm an avid backcountry snowmobiler. It's what I like to do. It's currently snowing in Montana as we record this, so I'm getting excited. But I have my snowmobiles are recalled so many little tiny parts all the time. And one that's just I got an email on it over the summer was this little connector piece on the fuel system. And it's like, I don't want to be riding my snowmobile and it just catch on fire or blow up while I'm riding it. So I get that email, I call my dealer, and it's scheduled to go in to get it fixed before I start riding it. So you can do the same thing, just like I did with consumer product safety. You can do that with your baby equipment and get those notifications, or continually just manually check online. It's super simple.
So, and maybe there's and sort of the next phase I want to top of where there's ways to sort of be proactive and reducing potential liability. And it's something that I haven't done yet, but am maybe thinking about installing, and that's like noise monitoring. It seems like it could and potentially save us from there being a big party. And when there's a party, there's drinking, there's all sorts of things that could potentially be not only a risk to the property, but a risk to everyone at the property. Do you guys have an opinion on sort of noise monitoring devices and their sort of benefit, not benefit of having?
So our data shows that they are beneficial greatly, not just from protecting your property, but also protecting your neighbors as well. I, without a shadow of a doubt, recommend every operator to have some type of noise monitoring device in their property. Now, over the years, technology has gotten much better, and so devices that don't just monitor noise. You can get devices now that monitor, up to 15 different types of things within your home in a very non-invasive way, from noise to vibrations to how many people are connected to your Wi-Fi, carbon monoxide levels, water trickling or dripping sounds. It picks up moisture, mold detection. There's some tech out there that's better than just noise. And we see a reduction in claims because of those. And specific to us, we even offer discounts on them when you install them in your property because it's helping us not have to pay more claims. So, so I highly recommend everybody. Right now, I'm again, not paid, but I'm really into this new device from a company called Dwellwell. It's got 15 different sensors in it. It's AI learning of your property and occupancy, what's normal, what's not normal, and it gives you a very intuitive dashboard on what it thinks the problem might be, from electrical to plumbing to mold to temperature irregularities to vibrations to things like that. To really give you kind of a big insight into what's going on at your property, especially if you're an absentee owner on the other side of the country, for example. So I love that device. There's a lot of other devices. There's Noise Aware that most of us who've been in the industry are familiar with. You have Minute, you have Alertify, there's Wind, there's Stayfi, Party Squasher. There's so many of them. They all do a couple of things. I just like the comprehensive nature of Dwell Well personally. It just does a lot more than all those other ones combined. So
Yeah. No, that's helpful. Are there any other things sort of staying on that narrative and outside of sort of monitoring devices that I could be thinking about of like being proactive in terms of managing risk over and above devices or insurance or things like that?
yeah, I think the number one piece of advice I could give to everybody out there is remove the term grandfathering from your vocabulary when you get into this industry. Because from a safety perspective, you've moved in from a residential property to more, in the legal sense, a commercial property. And commercial properties are held to a much higher standard. So you're not grandfathered into not needing handrails on your stairs at this point in time. If you buy a property or currently own a property, and there's 4 or more risers on interior, exterior steps, you have got to have a handrail. That is a primary target point for an attorney in a slip and fall accident if somebody slips on those stairs. So, very inexpensive way to help mitigate risk around trip and fall hazards is handrails and guardrails. Guardrails on your elevated surfaces, handrails on your steps and stairs. And then also the way you buy something. So let's use bunk beds for an example. Bunk beds are regulated at a more or less a federal level and how they're constructed. But we see a lot of property owners kind of deconstruct how it came from the manufacturer to make it more visually appealing at their property. You have to have a top guardrail, you have to have a permanently affixed ladder, and you have to have a mattress that still gives you 4 inches between the top of the mattress to the guardrail on the top bunk. They come with safety stickers already put on them. People remove those. It says children under 6 shouldn't be in the top bunk, and this and that, and use this mattress and these things. Like, don't remove that. They're there for a reason. And those are alternative sources of defensibility for a company like us when our liability adjuster has to get involved with you. It's like, here's exhibit A. Like, it's not on our property owner. They did everything that they were supposed to do. And like Justin Ford talks about this a lot. When you buy movable furniture, especially like bookcases and stuff and dressers, they come with a strap to put on the wall to prevent tip overs, especially children climbing up them and, rough housing. So utilize the equipment that comes from the manufacturer that's there to help make your property a safer place for people to be. Now, in your own home, you just throw those in the trash. It is what it is. If my 5.5-year-old son climbs up his dresser and it falls on him, well, you learned a lesson. But if I have a guest in my home that happens, I'm going to learn a lesson via a demand letter in the mailbox, unfortunately. So,
Yep. No, I've got a 7-year-old, and when we go to a vacation rental, they are always they immediately getting up and jumping off a bunk bed. And so when we sort of set up our property, we're like, you know what? Like, we're not going to have bunk beds. Like,
yeah,
as much as the kids, like, that was the one request from our kid, our oldest son, was that we have bunk beds, and we've got 2 twin trundles, and that's what we're going with.
yep. There you go. There you go. Yeah, that's a big thing insurance wise. Like, we typically, when our clients run into having a liability claim, it's typically within the first 24 hours of that family being at the property. And being in this industry for almost a decade now, I just attribute that to you're unfamiliar with the home. You start creating familiarity within the second or third day that you're there. But within that first day is more than likely when an incident liability wise is going to happen. And so, I think it's really important too for people to bring in neighbors, bring in your friends, bring in family, and be like, walk around the house. Tell us, like, is there something that you see that's out of the norm that could be, a potential hazard that we didn't think about?
Yep. No, we actually did that with my sister. She has a 3-year-old, and we are like, "You guys just go up there, spend the weekend, give us a list of, like, everything that you thought was wrong, needs to be changed," like, on comfort and of just, like, where you just didn't feel comfortable with your 3-year-old being there. It was super helpful because there are things that you just don't realize, and because you're not in that sort of mindset of, like, and what are those hazards there?
Yeah, yeah, of course. I mean, it's a great way to go about it because you sit there and you found the property online or through a realtor, and maybe you visited once and the numbers worked and you're ready to rock and roll, and then you get a designer in there and you furnish it, and you don't even go stay there yourself before you have guests. So I think it's important to do a kind of a beta test on your property before you make it live and make any minute corrections that might be needed.
Yeah. So maybe moving on to another topic that and has very much been top of mind, and we talked about natural disasters a bit, but and being in North Georgia and seeing the devastation that we just realized, and with the hurricanes, and not just the hurricanes, then the sort of massive flooding through Western North Carolina, and sort of teeing up a question around like what are the examples like where you see that just hosts don't have the right coverage that it ends up being an uninsured event. And I sort of hear that a lot around flood insurance, but and can you speak to like what you're seeing out there? And one related to what happened in North Carolina, and two, what other examples you see?
Yeah, so it's definitely top of mind. It's been specific with our clients who are currently insured with us and in that area. It's a very difficult thing to go through because we've really built our business and brand around being different than other insurance, right? We really promote and project correctly because this is actually what we do. We do everything in our power to find you coverage within the contract, and we know our contract in and out. It's not our job to just come out and deny and deny and deny and deny. We don't want to pay a claim. That's not it. In fact, we want you to leverage and use your insurance policy through us. That's why you bought it. But when it comes to flooding, there's only 2% of the United States carries a flood insurance policy. Back to insurance forms basically come in a basic package of three different types of contracts you can buy. There's three types of insurance overall that you can get for your home. There's the basic fire and liability, which okay, homeowners insurance and covers more than just fire and liability, of course. Then you have earthquake or earth movement, which is a different policy. And then you have flood insurance, which is a FEMA backed program for flooding, which is the natural occurrence of water protruding into your home without a storm created opening, right? So if we look at the wind blows hard, breaks off a corner of my roof, and then I have 3 days of continuous rain protruding through that opening, causing water damage in my ceiling, that falls on your homeowner's policy. But when I have water rising or tides surging or rivers overflowing or dams breaking, and that water then protrudes into my home, either through a crack in my foundation or the water levels are so high it comes through a window, that's a flood insurance policy, and that's FEMA. And unfortunately, most of these claims with people affected by that, not just in Florida, but in the Asheville area and surrounding areas of North Carolina, there is no coverage. There's no loss of revenue protection. There's no remediation coverage. There's no mold coverage that comes from it. It's just not covered. And that goes back to ISO, standardized insurance form language. That is how they're put together. That is how they're written. So if you're in a flood area, most lenders are going to require you to buy a flood insurance policy if you're in a high risk flood zone. So, like right on the coast, for example. And you'll have to go out and buy a flood insurance policy. But once you get into the other zones, they don't require it. Well, the further back you get in the zones on the FEMA flood map, the cheaper that insurance policy becomes because the risk is less and less and less. So I'm not saying everybody should go out and buy a flood insurance policy and a knee jerk reaction to everything that has happened over this fall, but it is something to potentially investigate if it is a concern to go ahead and get that. I do recommend it for people even in mountain communities. I'm in Montana. My office that I'm sitting in right now is at almost 5,000 feet. We had a major flooding event 3 years ago. It was a 500 plus year event that happened, and it was devastating across many communities here. If you look that event up, you'll see one of the main access points into Yellowstone National Park was completely wiped out. in the town of Immigrant was cut off from supplies and basically civilization on both sides because of that devastating flood. If you've ever been to Immigrant, Montana, Immigrant sits up on a huge cliff. The river's hundreds and hundreds of feet below it, but it wiped out bridges, and then it went and wiped out one of the main roads into Mammoth in Yellowstone National Park. So, nobody ever bought flood insurance there. Nobody ever bought flood insurance in the basin of Paradise Valley, but there's videos of homes being swept off the bank. So it is something to look at and see what it costs if it fits in your budget and it's a concern. If you're nearby a river or a lake or something like that, it is probably something in most areas you can get pretty cheap and might want to take a look at getting that. It is super limited in coverage, unfortunately. It's just the way government-backed programs are going to work. But that's really the nuts and bolts of it, Jamie. I wish I had better news for everybody and like we're gonna swoop down in our capes and be the superhero, but it's not covered on your regular homeowners form languages. It's not covered on our product. It's not covered on a standard retail market policy. You have to have a flood insurance policy to get that. Now we do have clients who had wind and storm damage, yes, where trees fell on their house and caused damage to the roof and things like that, and strong winds, ripping the roof up and stuff. And yeah, we're responding and paying those claims and loss of business revenue during that period of restoration. But just because your home or your area is cut off doesn't mean you're automatically getting that loss of revenue. There has to be a covered property loss for that to happen.
Yeah, and you've mentioned that one a couple times, loss of business insurance, loss of revenue insurance. Can you explain, like, what that actually is?
Yeah, yeah. So again, I mean, you're probably catching a theme here. Insurance really falls into three categories.
Yeah,
And so uh, you have loss of use, you have loss of rents, and then you have loss of revenue, right? Loss of revenue is hands down the best. So, loss of use is if my primary home has a problem and my family and I cannot stay in our home because of a covered cause of loss, the insurance company is going to pay for me to go rent out another home for my family to live in during the period of restoration. It is not covering loss of bookings. Then you have loss of rents or fair market value, which pays a fair market value of rentals in the area, typically tied to long term rental and what they bring in. So it's okay. You're still going to get some money, but it's probably not going to be what you're actually making. And then you have loss of revenue, which is the best. And loss of revenue is typically written to pay net revenues or even a little bit above net revenues for ongoing expenses and things like that. It's going to pay closer to what you're actually making on the property. We took that a step further and we actually rewrote on our contract specifically it's loss of gross revenue. So we would pay dollar for dollar based on your history tied to the insured limit that you select. That if you're in the peak season and have a claim, and let's say during peak season you're bringing in $10,000 a month, you're getting the $10,000 a month if you've insured it for that. In the kind of slower seasons, if you have a claim during that time and you make $4,000 a month, that's what the policy contract is going to pay. It's based on your historical grosses. And then if you don't have a history, like we look at, I mean, we use AirDNA for that. We use some other data providers that are out there, come up with a pretty fair value of what your home should be generating based on ADRs and occupancy percentages during the time of that loss. So that's one thing you really need to consider when you're buying an insurance contract, not just from a liability standpoint for your amenities, but to me, the second most important part is how long can I go without revenue? And if it's only 3 months, then I should really be insuring for a higher number. If I'm flush with cash and you don't care, don't insure it for that much, right? You're in a position where you can, save on insurance premium and then out of pocket the expenses of the home. So that's something you really need to know and understand and have that in-depth conversation when you're going through this journey of how am I protected when a covered cause of loss does happen and I have loss of bookings, how much do I get? How does it respond? What are my caps? Is there a timeline? You know, I just want to cover expenses for 12 months. Great, insure for that. I want to cover expenses and my profit because this is how I put my kids through college. Like you're going to end up paying more in premium, but that's, all based on how you want to manage that particular risk.
Right. Because your mortgage is a big liability, and you're making you're making an investment with risk, and it could be at no fault of your own that your house gets taken out of service. And if you can't cover that mortgage without, and I know when we were underwriting our property, it's like I feel very confident that the revenue we earn, even if we're not doing a great job, is going to cover the mortgage. But if that house goes out of service and we can't rent it out, like that mortgage payment doesn't stop.
Yeah, it and the property taxes keep coming, and the utility bill doesn't shut off, in most cases, for more common claims.
Yeah.
And yeah, they just the bills don't stop showing up. So how do we plan around that, and how can we leverage our insurance contract to help us keep doing that? It's a conversation that myself and my team have with our clients, and we try to really spend a little bit more time on that point of the conversation with everybody to really get an understanding of, what's going to happen in the event of a claim. A little data tidbit for everybody. The standard insurance market, if you look at the data, it's kind of widely known in our industry on our side that you're going to have a claimable event at any property that you own once out of every 10 years, give or take. It's like 9.2, but let's just call it 10. So I've lived in my house now for 4 years. The clock is ticking. I'm going to have something happen that is a claimable event, whether I file a claim on it with my carrier or not. Our data shows with short term rentals, it's more like once every 5 years. So it's not an if, but it's a when in this marketplace. And having the right insurance and kind of doing the math over a 5 year investment on your insurance policy, because you more than likely will need to leverage that. And then how much income are they paying? So for like kind of simple math, let's say you're paying $5,000 a year for a more comprehensive product over 5 years, that's 25,000. Well, if you're going to have the number one claim in insurance is water damage, and our average water damage loss before loss of revenue is right around 50 grand, you're going to make out on the insurance policy investment, right? Plus your loss of revenues then kick in and pay out. So kind of, unpacking it that way, because, these types of packages that are more comprehensive are definitely more expensive. We won't shy away from that. They definitely cost more. More than likely, they're not going to take your revenue into the negative category unless you're already in the negative category on the income generation with all of your on the net side. But typically, you're still going to be generating money. You're still going to be profitable. But then if something does happen and you're shut down, we're not just protecting that profit. Let's also look at protecting the growth side of the revenues to make sure all those expenses continue to be paid.
No, that's super interesting. And one of the things, and I probably should have disclosed this at the beginning if I didn't, was that I am and using property insurance for my short-term rental property. And like one of the things I actually liked in working with you guys was it felt like there was whole nother set of eyes on the property and going through all the photos of like actually investigating what are the risks out there that need to, and you mentioned one on like the stale rails and need to have like pictures of every single set of stairs and like where does the railing go up to and make sure it's fully done of like what is the risk associated with the stream of a hot tub of like any sort of amenities that would add additional risk. And it felt like there was another sort of set of eyes to make sure that we were sort of covering the basis and not like missing anything big.
Yeah, yeah. Where we like to kind of separate ourselves from the general, there's distaste for insurance. Let's just put that out there. People don't like an insurance. It's maybe more of a necessary evil for some folks. But really looking at it more along the lines of like, you're not just buying an insurance policy, you're hiring a risk manager. So again, taking a page out of the hotel industry's book, they have obviously very robust and very expensive insurance policies, but they run the risk of losing their insurance every year if they're not up to par from a safety standpoint. So a lot of major hotel chains have engineering companies and things like that they hire to come out and inspect their properties before the annual insurance audit, right? And so kind of taking that page out of their book and then applying that to the short-term rental world, you're not just buying an insurance policy, you're hiring a risk manager. So then we come in and just like you said, Jamie, we're looking at the photos on Zillow, let's say to start, because that's what we have available to us. And then 60 days later after you buy insurance, now your online listing is available. So now we're going to underwrite it a second time. We're actually going to look, how do you describe the property? What are all the amenities that you're putting out there? What's your layout? What's your setup? What do we have going on? And are there some things that maybe in some cases are an actual fundamental underwriting requirement to actually stay in the program with us? Some of them are more just an advisory standpoint. like, hey, it's our recommendation that you do this or this or that around your property to not prevent necessarily from something happen, but give us some additional defensibility in the event something happens to protect you. So yeah, like for us, we make money selling insurance. Of course, it's what keeps the lights on. But at the end of the day, it's education and taking that kind of load off your plate. Like, let us give you the checklist and then go through and complete that checklist and send us photos that you've got it done so we can house it in a file in case something happens.
Yeah. And I'll say, like, when you talk about all these things that you get, it makes it sound like the insurance offering that you provide is gonna be, like, wildly more expensive than what I'm gonna be able to get from another offering. I'll tell you what I was surprised is, like, how competitive it was and how comparable it was to just a normal owner's insurance policy. And, like, what do you guys typically see there? And, like, or do you know of, like, how you guys typically compare with all the additional things you guys offer over and above just, like, if I just would get a homeowner's insurance policy?
Yeah, the easy answer is 2x is typical. And 2x is, I mean, the standard price for a homeowner's policy on average in the United States, excluding coastal areas, is around $2,200. Our average price is around 38, right? So, and again, that's excluding coastal, and a lot of it has to do with, geographical location, the age of construction, has it been claims, there's a lot of different kind of pointed things that may play with the premium, but that's just kind of the standard of it. Now, kind of going back to the beginning of the conversation, kind of the hardening of the market and geographically carriers pulling out and stuff. Certain areas we're seeing in the retail space that they have applied for rate increases as much as 60%. So we are seeing the retail marketplace climb closer to us. And over the years, we've had to inflate our rates as well because of claims. It happens. And we cover a lot more. We have fewer exclusions, so we end up paying more. But we've come to a pretty steady spot, premium wise, in our book of business, and that we may have some kind of arbitrary rate increases that are necessary, market specific. It's not necessarily a book wide kind of rate increase anymore. So we are seeing those policies come closer and closer to us. We are seeing companies that got into the kind of short term specific market a few years back, 5, 6 years ago. We're seeing they're probably getting some more claims history, and we're seeing them either raise their rates or strip away coverage. Those are always your two options. You either pull coverage and then keep your premiums the same, or you keep your coverage the same and raise your rate. So we do see us becoming more and more competitive price wise. I'd like to just kind of test everybody to, in your initial starting again of this journey of insurance and risk management, price should be the last thing that we consider. Let's start with coverage, our necessary needs, how we want to market the property, the offerings we would like to provide at our property, and then make price a kind of second component to this, right? Price can always be changed on deductibles. Price can be changed on limits of insurance adjusting and things like that. So kind of put that on the back burner and get a fundamental understanding of the coverage package, the customer service, the viability of the carrier behind it. Is it a financially sound carrier that is not going to run into solvency issues? So those kind of things first, and then price next. Because, like I said, if you're using AirDNA and you're getting all the numbers, AirDNA, you guys have the little box to put in the insurance premium, so you can get a quote from us and plug in the number manually and show that you're still in profitability in most cases.
So I can't believe we've already been talking for almost an hour on short-term rental insurance, and maybe this is typical for you, but
They sometimes go longer than anticipated, but I do my best to try and keep it an interesting topic because this is
yeah.
probably the least interesting thing to talk about when setting up a short-term rental. There's many other topics that are a lot more entertaining, but it's fundamentally how you're going to need insurance at some point. And when you talk about sustainability of this marketplace, for a lot of folks, insurance is something you're going to rely on heavily to sustain it, just like we talked about with the income protection and liability protection. So, make insurance fun and an important part of what you're doing. And really kind of spend a little bit more time focusing on it in this space than you would if you're just buying a new home to go live in as your primary residence.
Yeah, and I think that and definitely focused or went into my sort of calculation of like I was buying for a long-term investment. I wanted to make an investment in my insurance or of like coverage of like that there wasn't going to be a small thing with a guest or with the property that's was going to put at risk that investment that I was looking to hold for the next 10 years. Like it seemed like silly to look to save a few $100s on insurance when that additional coverage could make or break like whether I keep doing this 5 or 10 years from now.
Yeah. And like, we run into a lot of folks and you had mentioned it earlier and we didn't really have a time to touch on it, but with, the OTA provided protections, you have air cover, VRBO has some insurance, things like that. Just, you got to remember those are all supplemental. They have limitations, they have exclusions. I don't want to dog on air cover, but Airbnb use that as a great marketing tool to accelerate their business and their inventory. Fantastic. And I've seen it pay some smaller claims, and I unfortunately haven't seen it pay a lot of bigger claims. But it's nothing more than supplemental, and you still need to have your own insurance. It does not replace the retail market, it doesn't fill every single little gap. And when it comes to smaller damages, they happen. You're going to have broken lamps. Somebody's going to break a TV. Somebody's going to do this or break a chair. Um, that's where you utilize that. But when you have something substantial happen to the property, you really want to make sure you're confident in the product that you have behind you to protect your investment.
Yeah. I think what was it? Will they Airbnb increased their coverage from like 1 million to 3 million? I'm like,
Yeah, they did, and they added some great perks to it. They added some more stuff around pets, pet caused damage, excessive cleanings, things like that. But there's you can just go on X, you can hit Google, you can find these stories of guest caused damage for leaving the sinks running or things like that. Hundreds of thousands of dollars in water damage with very little response there. So now it comes down: how are we going to be financially sound after that? Does my homeowner policy, is it correct? Does that homeowner policy that I bought that I thought was right have a business activity exclusion? And then now they're going to tell me no. Do they have limitations on water damage? That's kind of the new one in the insurance market, is putting caps on how much they pay on water damage. Sometimes it's 10, sometimes it's 50, sometimes it's 100,000. So do you have water damage limitations? Again, it's the number one claim in insurance. So if anything is going to happen property wise, it's more than likely going to be a water damage claim from pipe failures or things like that. So making sure you have, no limitations or good high limits on that type of stuff, because that's more than likely what's going to end up happening.
okay, well, Nick, this has been a pleasure. If people want to reach out to you, want to learn more about proper insurance, how can they do that?
Best way to do it is website www.proper.insure. If you Google short-term rental insurance, we should be number one that pops up. Our website is full of educational material from the blogs to through the home pages. Even if you're just looking to get some info and just kind of self-educate, it's a great place to live for 15, 20 minutes and read some blog posts. If you're looking to get a consultation, just click the quote button, some simple property information, and we'll reach out to you typically in less than 24 hours to dive in and have a conversation with you about your property and see if we can help you out.
Awesome. Well, Nick, this has been a pleasure. Thank you so much.
Thanks for having me, Jamie. It's been fun.